Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. This video is going to speak on the Forex trading sessions. Before we get into today's lesson, let's get into our disclaimer. Do your own research. My content is intended to be used for informational purposes only. Please do your own research before making any investment or trade based on the information provided, and consider your own personal circumstances. You can talk to a professional or do your own independent due diligence on verifying any information you find on my channel. This is a message from myself, Deontay, as I am not a professional. With that being said, let's get into today's lesson. There are time zones and trading sessions that open and close throughout a full trading day. There are three main trading sessions: London Open, New York Open, and Asian Open. I'd advise you studying each one individually. You will notice characteristics within each three. Let's start with the London Open. The London Open. It begins at 1 a.m. and ends at 5 a.m. New York Eastern Standard Time. There is an increase of trading volume within this time period. It normally forms the high or low of the trading day. This is where most of the trading volume occurs for the daily range. Here, London, Europe, and other Western countries are waking up to start the trading day. On the left, we are going to look into examples of the London Open. So here, we're looking at the London Open session on each trading day. So as you can see, we have June 9th, we have June 10th, we have June 13th, we got June 14th. So we're only looking at a specific moment in time. We're looking at 1 a.m. to 5 a.m. That's early in the morning after midnight in New York. So let's look at each day and see what we can see. We can see here between 1 a.m. to 5 a.m. So we'll draw this down so we can see more precisely. Here to here. You can see that the market for this trading range for June 9th, because this is the start of midnight and this is the start of midnight over here for the 10th. We can see that price came up to create the high of the day. However, a little shortly after that, price runs that high quickly. So we didn't get the high of the day here, but however, it was pretty close and accurate to making the high of the day on a bearish day, as you can see here. We move on to the next day. We can see June 10th, right? June 10th, price comes up between 1 a.m. to 5 a.m. creates what? The high of the day. So this is the highest point price has been the entire day, right here. And after that, it runs lower. So it created the high of the day again on a bearish day during this time bracket, 1 a.m. to 5 a.m. Move on to the next day as well. You can see between 1 a.m. and 5 a.m. price comes up, makes the high of the day here on a bearish day, and runs lower. Move on to the next day. We can see here on the last example, on a bearish example, as you can see, price between 1 a.m. and 5 a.m. created the high of the day on a down closing day as well. So there is a characteristic to the London Open session. You can see on bearish days, right, or days that are going to be trending downwards, the high of the day normally forms between 1 a.m. to 5 a.m., as you can see in these examples here. Now let's look at an example from the bullish perspective. A bullish example, or bullish week essentially. We're going to look at 1 a.m. to 5 a.m. and see what happens during those time periods with price. So we're using the same exact days that we used in the Australian dollar example. So looking at June 9th, we can see here between 1 a.m. and 5 a.m., we don't get the low of the day. We get the low of the day outside of that session. Now, does that mean that there's something wrong here or that the markets aren't working properly? No, it's just that there are some times the day is not going to give you the low of the day when bullish here. You have to be a little flexible. Things are not going to be exactly the same way every single day. Things are going to change. Things are going to tweak. Some things are going to fail. And you have to live with that. So you can see the low of the day forms here. Now as you move forward, you'll see what I mean by this example. Moving in June 10th, you can see the low of the day forms where? Between 1 a.m. to 5 a.m. on a bullish day. So on a day that was trending upwards, the low of the day came in here by way of London Open. Let's look at the next day. So look at June 13th. The low of the day for this trading session comes in between the London Open again. You see that? The lowest point for this trading range is right here between this time period. We move on to the next day, June 14th, the last example. You can see that price makes the low of the day right before 5 a.m. Right here. So it makes it right at 4:30 a.m. Makes the low of the day, New York Eastern Standard Time at 4:30 a.m. and then rallies away from it on an up closing day. So as you can see here, when the price is bullish or the market is going to be trending upwards, it's most likely going to form the low of the day between this session. That does not mean every single day it has to make the low of the day between 1 a.m. and 5 a.m. There are days where it does form the low of the day outside of that range. And that's just something you're going to have to live with Forex. You have to be a little flexible. So moving on. The New York Open. It starts at 7 a.m. to 10 a.m. New York Eastern Standard Time. There's also an increase in volume just like the London session. In this session, you're only mainly concerned with two things: the phase of retracement or reversal. Many people associate the New York Open with North American Open because many of the Eastern world countries are waking up to start their trading day. Let's look on the left for an example of a New York Open session. Here we're looking at the New York Open session. So normally two things happens here in the New York Open. You're already going to get a reversal, meaning whatever the London session has done, the New York session is going to undo it, which is going to reverse whatever trend the London session was pushing price towards. Or you get the second characteristic of a retracement, which continues into a continuation pattern or a following trend. We're going to look in the lower time frame on the 5-minute to look at each day and see what happens. As you can see, this is June 9th, a full trading day, and we're looking at the 7 a.m. to 10 a.m. New York Open session. You'll see that there is an orange box highlighted here with an arrow from the high point to a low point. That box here is what many are familiar with from the teachings of ICT, optimal trade entry. Optimal trade entry is just the optimal area where smart money is going to most likely enter their positions. Let's zoom in to give a further demonstration. You can see here, price created a high here and a low here, creating a large candle to the downside. So we got a nice expansion with a quick retracement up to a continuation pattern lower. So we're going to take our Fibonacci retracement tool, take it from this high down to this low, and we'll zoom in a little bit closer to see what that looks like. As you can see, and if you could get the fib on the front side, optimal trade entry lands exactly, if I could get this like this, in that box. And price tags it, hits 62% retracement level, and from that point here, from hitting that area, it continued to drastically drop, giving that retracement right here and dropping lower. There is also another one here, so there's a bonus here. So if you take this one off and we hide this, you'll see from this high to this low, we get a retracement up. That is an optimal trade entry because when is it occurring? During the time session, which is what? 7 a.m. to 10 a.m. So we'll bring this down here, bring this down here, so you guys can actually see it. You zoom in, you'll see from that high point down to that low point, we get another optimal trade entry. Where does price land? From 62% retracement level, from here all the way here. It hits that area of interest, and from that point on, from that retracement, you get a continuation pattern to the downside, all within the span of this time period. Now let's move on to the next trading day. So you can see the same thing occurs here on June 10th. We get a retracement into a continuation pattern to the downside, all during the span of 7 a.m. and 10 a.m. So where would that example be? That would be from this high here down to this lowest point here, that range. Price trades right into 62% retracement level, all the way up to 79% retracement level, and sells off drastically, giving us a retracement and then a continuation pattern expansion to the downside. That all occurs during 7 a.m. to 10 a.m. during the New York Open. Moving on to the next day, we have the same occurrence that's happening here as well. You have a high point and a low point between 7 a.m. and 10 a.m. you get an actual trade entry. So we take our Fibonacci retracement tool from this high down to this low here. You see price trades up into 62% retracement level to 79% retracement level, and then falls lower, closing lower for the day. Move on to the next day as well. You see the same thing occur during the New York open session. A retracement and then a continuation pattern. So we got this high point from here all the way down to this lowest point here. Price doesn't get there. Doesn't get there. Almost gets there, but doesn't get there. However, in future teachings, we'll talk about when buying and sell conditions set up. You'll see here on this Fibonacci tool here, price got above 50% of that range, which is going to be a premium side for the algorithm to sell lower. But we'll talk about that in further lessons. As you can see, on each day during the New York open session, there is some type of retracement, then continuation pattern between 7 a.m. to 10 a.m. Now let's look at a bullish condition. You'll see the New York open session, 7 a.m. to 10 a.m. specifically, and we're going to look on a lower time frame to see those characteristics that I was talking about, either reversal or retracement going into a continuation pattern. So let's go on a 5-minute time frame. June 9th, we can see that a reversal was granted here. Now, why was a reversal granted here? We know that this here, and within this time period here, from 1 a.m. to 5 a.m., that's the London open session, right? That London open session normally presents the high or low of the day. Now, since the New York session has broken that low, or the trading session low of the London session, we can anticipate either a reversal occurring. This was the low point. To show you the London open session. As you can see, the London open session is here, and that's the low that is formed. And then New York session opens, comes down, and rips below it. Now price then reverses and takes out the London opens high and the London opens low. So that's where you'll get that characteristic of a New York reversal. Now let's look at the next trading day. The next trading day, June 10th, we can see that there's an actual trade entry that occurs here in the New York open session. You can see from this low to this high, price creates an OTE for an entry longer. So let's look at that with our Fibonacci retracement tool. So from this low to this high, you can see price rallies up, comes down right into 62% retracement level, all the way down to 79% retracement level, and gives us another opportunity from that retracement to go long for the continuation for a bullish day. Looking at the next trading day, you can see we have another actual trade entry that occurs. We can see that we have a high point to a low point, so we have in range. We have our time period that we're concerned about, that characteristic occurring. You can see from that low to that high, we get that OTE set up. And now you do notice that price does come below with that OTE, but notice Forex isn't perfect. Everything that you are taught or that you see is not going to be exactly the same every day, and is not going to be exactly precise as you may want it to be. These things are out of our control. You can see price comes below 79% retracement level, but does ultimately still give a nice entry to go long, but your stop loss would probably be below the swing low here. You go long for that continuation longer. Let's look at the next trading day. You have a smaller actual trade entry here. So from 7 a.m. to 10 a.m., that's the time period we're looking at. You can see that we have this swing low and this swing high, and price comes down and gives us an OTE setup. So we go from this low to this high. We'll zoom in. You can see price comes down to 62% retracement level. Right, hits it, fails to get to 70.50, but still gives us the actual trade entry region that we need to be looking for to get in our positions. And then it goes long. So that retracement quickly into that long, finishing that bullish day. as you can see there. So this is essentially what happens during the New York Open session when bullish, and I showed you what happens with Australian dollar when the market is bearish, what happens in the New York Open session. And then let's move on. Asian Open. This session starts at 8 p.m. and ends 12 a.m. midnight New York Eastern Standard Time. There is a decrease in volume during this time period, and there's primarily consolidation that happens in this session. Now you know there are two asterisks next to it. Now it all depends on what pair that you're trading. There are some pairs that have an actual increase in volume during the Asian session, and there are some pairs that do not consolidate during the Asian session and actually trend very dynamically during the Asian session, especially when a higher low is broken. With that being said, let's look into the examples of Asian Open. Here's AU again, and you can see that during the Asian session, which is 8 p.m. to midnight, the start of a new trading day, you can see that the market is primarily in a consolidation or a holding pattern. There is a tight range. Let's go down on the 15-minute time frame to look at this consolidation a little further. As you can see here on the lower time frame, price is consolidating. You can see price is generally ranging within a certain holding pattern or a certain high or low. It is not dynamically expanding to the upside or dynamically expanding to the downside. We are just seeing sideways price action occurring here. This is price moving sideways. This is consolidation. You can look at June 10th. We can see almost the same thing identically happens here. Not exactly the same formation, but it's identical. You can see that during this time period, 8 to 12 a.m., consolidation, a holding pattern. Moving on to the next day, you can see almost the same thing. Price is generally within the same range, the start of the session into the end of the session. Okay. June 14th, you can see the same thing, consolidation. Now let's look at it from a bullish perspective. So here is US Swissy, and you can see that price during the Asian session is giving a holding pattern. The candles aren't really large in range and pips during this time period. Let's look at it on a lower time frame. You can see here on June 9th, during this session, price is consolidating. There is no significant move higher or lower. There is no dynamic explosion to the upside or the downside. Let's look on June 10th. The same thing can be seen or occurs here as well. You can see price is trading within this range, not significantly going higher or lower. It's being held here. Same thing happens on June 13th, the next day. You got another holding pattern. Price came from this high point, came all the way down, came back up to test that high, made a double top, came back down, made a double bottom. And move on to the next day, you can see the same thing here. Holding pattern. Price isn't really moving anywhere. It looks like it's stalling or it's building up for something. As you can see, this is what the Asian Open looks like in bullish conditions. Not any different from a bearish condition as well. But like I said, there are some characteristics depending on the pair that you trade. The Asian session can pick up in volume or it can trend in a reversal direction. Main concept. If you are an intraday trader, you are only concerned with trading within these time sessions. Trading outside of these sessions will be detrimental to your equity. I promise you there is no ifs, ands, buts about this, but trading within these sessions is more probable for you as a trader. I'm going to save you the time, headache, and financial burden of trading outside of these sessions. Trading within these sessions is more favorable for you as the trader. Period. Market session flow. These markets key off of one another. Asian Open sets up London Open. London Open sets up New York Open. However, many traders do not understand that these markets move in certain codes and patterns. Here on the left, I'm going to show you how the London, New York, and Asian session move all conglomerately to give you a full trading range. Now, if you look here at the London Open, we can see that if it's going to be bearish, it's most likely going to create the high of the day, which it did towards the end of the session. However, midway between the London and New York Open, price did come above it and took out the high. So this high here reclaimed the high of the day, and then price continued to fall lower. Here we know if you go on the 5-minute time frame, we got that optimal trade entry here and here as well. So we had two opportunities to get in short here with the market. Moving on, you'll see that we then go into the Asian session, right? The Asian session is a bunch of consolidation, normally and typically. However, if you see a low broken by the Asian session, so you can see these clean lows here. You see these lows here. So the market opens here and kills all these buyers here, knocks them out. So anybody that was buying here and was in profit, Asian Open opens, runs their stops, and then trends the opposite direction. It does look like consolidation. However, if you look at it closely, you can see that there is a trading opportunity here. Moving on to the next day, you'll see that the Asian Open is consolidating, keeping price in a tight range. You'll see that London session runs above the Asian session high, creating the high of the day. New York session creates a quick retracement from the London session high for an optimal trade entry short, and then price ultimately runs lower below the Asian session low, falling even lower, continuing the trend to the next day. The next day, the Asian session is open. We bring this to the front. You can see, send it to the back, you can see here that the Asian session is consolidating, and as you can tell right here, Asian Open starts here, price comes down, sweeps clean lows, and then rallies away. You have a start of a new day out of that consolidation. Price runs up, takes out the Asian session high, so the highest point this session has made, makes the high of the day, runs lower, runs below the Asian session. Then in New York, we get a small retracement and then a continuation lower, away from London Open and away from the London low, the Asian low and the Asian high. So we're running away from this area of consolidation. You'll see the same thing the next day as well. Consolidation, right? Price runs up, creates the high of the day here, above the Asian Open or the Asian session, then runs lower, back down to the Asian low, creates an optimal trade entry here, retracement, and then continuation pattern, lower and away from the high of the day, and away from Asian high, and away from Asian low. Price is running away from that consolidation, this primary box of a holding pattern here. We move on to the next day. You can see here, price was consolidating, and then price came down, ultimately breaking the high here, and then running higher. So the market started trending bullishly after this down week. So this is how the markets move with sessions with one another. Now let's look at a bullish example. June 9th, we're looking at U-Swissy. You can see that if this was going to be a bullish day, we were anticipating the low to form here in the London Open session. However, we didn't get that. We got New York coming down and giving us a reversal instead of a retracement. So price breaks the low that is formed within this time period, runs down, creates a low of the day here, and then rallies away, causing a reversal. Price trades higher. Then we move into our Asian session. As you can see, we get that consolidation that we normally get, right? Consolidation. Price is then going to look to make the low of the day below the Asian session. So it drops below the Asian session. So the holding pattern, the consolidation, it's now below the consolidation within this time period. Creates the low of the day, rallies away, starts the New York Open session, 7 a.m. to 10 a.m. You can see we get an optimal trade entry retracement and then the continuation pattern higher, running away from the original consolidation here from Asian session. We go to the next day, we can see here another holding pattern or consolidation. Price creates the low of the day where? Below the Asian session, runs above the Asian session high, rallies, opens in New York, get a retracement, and then rallies back up higher away from the original consolidation. Move on to the next day. We can see a greater example here. Price creates a holding pattern in the Asian Open, and then we can see price in London drop below the consolidation box or the low of Asian low and creates the low of the day in this time period here. Price then rallies, gives an optimal trade entry here in New York session, and rallies even higher above the original consolidation box here. So as you can see that there is a pattern to the market. They are definitely working off of each other in certain instances, in certain moments in time. So hopefully you guys learned something new today. We're going to conclude the video. As always, I'll leave you guys with a quote. You may delay, but time will not. Benjamin Franklin. Thank you and peace.